Let's see. That is not encouraging. It's not encouraging at all. But then we move. So let's do really, really and one other question. Then we move to a estate. Even if it's just the waiting aspect, we must do something I need to do. Okay. So I hope you can see my screen. All right. Willy Willy was employed by Zenith Bank Limited as the head of banking operations effective June 1, 2021. Details of the salary were as follows. As follows. So you have a salary. Really was provided with official car. The cost is 7.5 million. He was also provided with driver, personal assistant. Then they gave us their salary per annum. Before joining Zenith Bank Limited, Mr. Willy was on an annual salary of 32 million while working with Caban Bank, and he resigned from the bank effective May 31st, 2021. We have additional information. He's married with 6 kids, all of school age, maintains aged parents who live with him in Lagos, annual life insurance premium. Then he also pays NHF and pension. He also has NHIS. Calculate the tax liability of Bilibili for the relevant assessment year. So first of all, what is the relevant year of assessment? Remember, PIT for self-assessment is what is on preceding year basis. So we have Mr. Willie Willing computation of tax liability for it will be 2022 year of assessment because it's of the preceding year basis, right? So we have Naira, yeah, this could be golden. Please, if I'm going too fast, you want me to re-explain, you can just stop. Okay. So the first thing that we're going to do is what? End income, right? And income. And his end income include the cash emolument and the benefit in kind, right? So cash emolument, we have the basic salary. How much is the basic salary? 48 million. Let's make this 48 million. Housing. How is it in imposing itself? Housing allowance. How much is that? 12 million. Transport. 2 million. Utility. Utility. All the allowances will be written. Meal allowance, leave allowance. This meal allowance Assuming is you know, when the company gives the employee meal in a canteen, when the company has a canteen, the firm has a canteen, physical canteen, and the employees eat from there for free, it's not going to be computed as earned income. Because the employee is not the one collecting the money. You get, so it's not an earned income. That one is not part of the income. Leave allowance 4,800,000. Clothing allowance 2 million. So we have the cash emoluments. Then we have the benefits in kind. And that one starts with what? Official car. Now when we have official car, what is the value that we are going to write here? I don't know why everything is bolding itself. Oh yeah, people talk. Oh, are we going to be writing the entire cost of the car? How do we cost it?
5%.
5%. 5%.
5%. So it's going to 5% of the cost of the car. So I've not put 1, 2, 3. 1, 2, 3, 4. Still can put no zeros. Okay, that's the official car. Then they gave me a driver. Don't forget, because the driver, the company is a contract work and not one of the employees of the company, so it's going to be recognized. 300,000 for driver, and for PA, how much? 500,000. So is that all? And we are forgetting something very important. These ones that we are writing is from June to December, which means it's not for the whole year. June to December. So when you count June to December, how many months do we have? How many months do we have, please? This is June 1, which means June is inclusive. That's 7 months. So we are going to be prorating this one 7/12. So equals to 7 divided by 12 multiplied by that figure. And that's what we are going to do for everything. Let me see if it will work. Okay. 7 divided by 12 multiplied by this. It's a way to make this thing work. Let me down to what's this one. Oh, let's just write it off. If I cannot get the shortcut. 7/12 multiplied by this one too equals to 7/12 multiplied by equals to 7/12 multiplied by 7/12. Clothing allowance. Okay. So all of these ones will be 7/12 because they cannot pay full year when the man has not used full year now. I think we are good as to the reason why I'm using 7/12. Okay. So I think that is all from Zenith Bank, right? But don't forget that he worked at Carbon Bank for 5 months. So now let's talk about Carbon Bank salary. And they gave us per annum salary. So we are the one that will remove the 5 months there. So we have Carbon Bank salary. How much is it? Equals to 5 months over 12 months multiplied by 32 million. Okay. So this is what we are going to call our what? Gross emoluments. What do we call this? Gross emoluments. Then what do we have next? Tax exempt, right? So we have, let's check. We have tax exempt. We have life assurance premium. Which is how much? 3 million. Then we have NHF, the National Housing Fund, 4.9. Then we have pension, 116667. We have NHIS, 350,000. So let's add it all up to get the total exempt. Remember that we are removing exempt, so I'll be using minus, so that it's going to give me a negative figure. After taxes, what we get will be called what? Gross income. Gross income. So our gross income equals to how much? There it is. Then calculate our consolidated relief allowance. And what is that? Higher of 200,000 or 1% of 45,493,750 plus 20% of 45,493,750. You can just use formula direct. Max. So we are looking at the higher of 200,000 plus 20% of this figure and 1% of this figure plus 20% of this figure. So remember that I've put minus there before. It will pick the higher of the two for us straight. But you can calculate it by yourself and see if it's the same thing. Calculate 1% of this what did he give you? Is it higher than 200,000? If yes, add it together with 20% of this. If no, you are picking 200,000. So now this is what we know. How about our taxable income? Then we are going to calculate our tax liability using the tax band. So we have first 300 at how many percent? Take 7%. Next 300 at 11. Please correct me if I'm wrong. Next 500 at next is I think is it 15%? Next 500 at 19%. Next 1,600 at 21%. Balance, which you have to calculate. Please, can somebody call these figures for me? So I won't have to calculate it one by one. Are we all there?
Yes, well, we are here.
Okay, please, can someone call those figures for me, or you guys know you don't have it? Let me go and check it. It's supposed to be this guy. Here it is. So you have 21,000, 33,000, 25,000, 95,000, 336,000. So now this one is going to be equals to this figure minus 3,200,000. If you add up all of these figures, we have 3,200,000. Okay, so now at 24 cents. Now I have to calculate it. I guess I can't write at because of this stuff, but please write at in your notes. Equals to 24% multiplied by this figure. So our total tax liability is this. Please, any question? Any question? Are we good? So I assume that we are good. Thank you, David. So now let's pick just one more before we move to the next topic. Or should we move to the next topic?
Yeah, we can look at one more question.
Okay. Simple type will be simple. Let's look at something a bit different. Let's look at this. Mr. Olalao works as the manager of XYZ Limited, which has its office located at Ikeja, Lagos. He lived with his family in Ibadan, Ogun State, and he provided the following information in respect of his 2021 assessment year. So, um, can you give me a minute, guys? Sorry. Solomon, you're welcome. You're just joining for the first time. Well, you've missed a lot of stuff. Oh. Maybe you go and watch the YouTube video to catch up. So let's go back to what we were solving. Sorry. I had to put something in my stomach. I was feeling very hungry. So now we're solving Mr. Ola Olao. Yeah, let me go doing that. I was reading right. He was paid a gross monthly income of 204,000, and in addition to his salary was paid the following bonuses: date of payment, date of entitlement. They paid in May, but that he has been entitled since um 4th of April, then September 24, August 7, May 7, May 19. Okay. He attended a workshop outside his station for a period of 10 days and was paid a daily allowance of 45,000 to cover hotel expenses, transportation, other incidental expenses. As a senior sales staff to the establishment, he was given non-assignable luncheon vouchers to the tune of 120,000 naira in year 2021. He was assigned an official vehicle for his exclusive use, which was purchased at the cost of 8 million by the company. He enjoys the service of a nice guard and domestic staff, fully paid for by the firm. Domestic servant was paid at 360 per annum, nice guard received 480 per annum, but was hired from a company offering security services. Okay. He was transferred to Port Harcourt on November 1st, 2021 and was paid the sum of 2 million for the purpose of relocating to his new station. He lived in a rented apartment fully paid for by the company for 600,000 per annum. He contributes to an approved pension scheme at the rate of 8% of his salary and is and has a life insurance with a capital sum assured of this, paying premium of 20,000 per month. Subscribe to the NHI, what's yours? NHIS, and the NHF took a scheme, NHIS is there, making contribution of 35,000 and 40,000 respectively on a monthly basis. So what is the requirement? For the relevant assessment he identified the tax authority of Mr. Olalawo, compute chargeable income, compute income tax payable, differentiate between contract of employment and contract for employment. So now let's take it one after the other. I says identify the tax authority. So we have the relevant tax authority of Mr. Olalawo is, oh yeah guys, let me take it back up. You know, he lives in Lagos, like he works in Lagos, but he lives with his family in Ibadan, Ogun State. So is it Lagos Internal Revenue that collects his tax or Ogun State Internal Revenue? Let me hear from you guys. And as usual, you have to support your reasons.
Ogun State. Ogun State.
Eh?
Ogun State, Ogun State.
Okay, Michael says Ogun State. So who else? Adeolu says Ogun State. Okay. So others encore.
I concur to what they have said.
Okay, Ogun State. So now let's go back to the material. I would like us to go back to where we talked about principal place of residence. Um, Place of residence. I think okay, here it is. Principal place of residence. Normally, your place of residence should be where you are as at the 1st of January, right? But for somebody that have more than one place, like Mr. Olalawo now, he has Lagos and he has Ogun State. Which of the two will become his principal place of residence? Somebody with no source of income, he has source of income. Now, someone that has source of income and income other than pension, right? So I would say it does not fall to two. Let me see number three. Who has a source or sources of unearned income in Nigeria? Works and operational. I think this one will be the best. He has a source of earned income other than pension. Though pension is not his own, fault. What he has is basically earned income. And his place of residence will be that place or places which on a relevant day is nearest to his usual place of work. Guys, so based on this rule now, which tax authority would take Mr. Olalawo's tax? You guys are not responding anything. Is it that you are confused? Okay, let me unconfuse you. You guys are wrong. It's not to State. That's why I had to go back to that stuff and read it for you before I even say the answer. He lives in Ogun State, but that's not where he usually reside. Like he used to live there, right? But his place of work is Lagos, which means he's in Lagos most of the time. And for somebody that have end income, he have both end income. He doesn't even have an end income, but he has end income. Your principal place of residence should be the place that is nearest to your place of work, because definitely that's where you will always be. Your place of work, that's where you will always be. The other place will probably be secondary, temporary places that you go, come back, go. But that place that is near to your place of work, you probably be there most of the time. I don't know if you get it. I hope I'm not confusing anybody. Guys, I'm not speaking you.
We understand you, man.
Okay, so it's Lagos. So mm. Okay, so number one now, I think you can now answer number one. It's not Ogun State, please guys, Lagos. I wish I can even explain it more than this, but there's no time. We are using close to an hour already. Okay, okay. The second question says that you should do what? Compute chargeable income of Mr. Alao. So let's do computation of chargeable for which year of assessment? 2022. Why is it 2022? Because the information provided is for what? 2021. I think that should not cause any issue. So now the first thing is what? The end income. And its end income include what? Salary. He was paid a gross monthly income of 205. This is crap. This question is probably a past question. I cannot even remember where I took it from. But with the structure, I can tell that it is a past question. If you go and take 204 as a salary, you are going to be very wrong. Why? 204 is not, you know that we are talking about monthly salary now. So now salary is now going to be this 204,000 multiplied by 12 months. So we have equals to 204 multiplied by 12. So this is the salary. So salary done and dusted. What other end income does he have? He's paid bonus, right? Bonuses. Let's take them one after the other. I don't know why this thing is putting itself. So we have different bonus, right? And what they want to test here is when do you recognize that this bonus have been earned? When do you recognize it? If I remember quite well, I think it is the earlier of the date of payment or the dates at which he is entitled to it. Earlier of the two. Like if they pay first, you recognize it on that date. If he becomes entitled to it first, you recognize it on that date. So regardless of the two, in this case, he received all of this money and everything fall into what this particular year of assessment 2021. So let's just add it up. So yeah, entitlement came before what payment. So it's going to be for April. How much is it? 92,000. Then this one, August, September. I think August comes before September. Oh, August, 162,000. Yeah, May, 58,000. So total bonus. That's the total bonus that we have. Bonus is still ending from, let's see. So they said he attended the workshop and they gave him daily allowance. So is this an income to Mr. Olalawo? I need to hear from you guys. Is it an income to Mr. Olalawo? Oh yeah, oh, I want to hear your opinion.
Sorry, come again.
I said that this particular information, he attended the workshop and they gave him daily allowance of 45,000 to cover expenses. Does this 45,000 serve as an income to Mr. Olalawo?
Yeah, I think it's an income.
Okay. Any other opinion? Why do you think it is an income? Oluwatimi, why do you think it is not an income? Kindly give your reasons. Oh yeah,
I
oh
thought
yeah.
it is.
Oh. Eh?
Since the question is saying he out of the station for a period of 10 days and it's just a daily allowance, I don't think it's an end income for him.
Okay. So the person that said it is, why did you say it is?
Yeah, I think it's an income because it's coming outside his normal employment.
Okay. So Ashimi, you said it is not an income, the money is for workshop people. All right, guys. Actually, it is not an income. But the reason Adeolu and Asmi you gave, your reasons are not the reason why it is not an income. Let us go back to our allowable Ade. Where will you see this? It's not in allowable, it's allowable. It's in this news. I know it's there, but I just cannot really tell where exactly you find it. We discussed it that any amount that they give you to reimburse you of the expenses that you make, it is not an income. It's not regarded as an income. That is the reason why it is not an income. It is like a reimbursement. They expect you that for you to come to that workshop, you'll be spending money. You will spend money for transport, you spend money for food, and they're not giving you that money that okay, all the money that you've got, take it back. Oh. So that's that money. Where will I find this thing? That's the reason why we are not um honestly, I don't know where I'll find it in this, but I know it's there. We talked about it. We talked about it. Maybe when you guys have time, you go through this material again to look for that particular. We discussed it last time. Okay. So no, that is not an income we ignore. As senior sales staff of the establishment, he was given a non-negotiable luncheon voucher to the tune of 120,000 in year 2021. So luncheon voucher, is it taxable or not? Luncheon voucher, guys. Let me look for this thing. Nobody's speaking. Oh. Hey, I've seen it. I've seen it. So listen, guys. So benefits to employees exempted from tax. I hope you guys are listening. Number one, expenses in connection with provision of meal in any canteen for all staff or provision of non-assignable lunch voucher. I know that you guys are silent on that question because you don't know it. Answer is here, and I'm still asking. Respond in the comment section. Does that thing serve as an income or not? I think I've said the answer already, but at least let me see if you guys understand. Expenses connected with provision of uniform, overalls, and other protective clothing. Expenses connected with the employee's change of residence as a result of his employment. That is, if they transfer you, they not because they transfer you, they gave you money to like um to let's say pack your load to that particular place of transfer. So it's also what is exempted. Um ah Kumasi ti kíní yẹn níbẹ̀. Reimbursement. Where would I find this reimbursement now? I'm very, very sure reimbursement is not an income and it's not taxable. Another question is where would I find it? Um ah, we'll just have to maybe find it later, or if anybody can volunteer to check through after the class, so we'll not waste time. Volunteer to check through after the class so we can know where that particular. I know it's there. We read it in the last class. I know it's there. Reimbursement is not taxable. Okay. So now, guys, I expect that I have answers in the chat box about this luncheon voucher. Where is it safe? Okay, I've seen it. Luncheon voucher. So is luncheon voucher an income or not? Nobody has responded. I hear you. I hear you.
It's benefit in kind, but it's exempted from tax.
It's exempted, exactly. It's what we just read. It's what we just read. It's a luncheon voucher. It's not like they gave him the money. The money did not even enter his hand. What they gave him is the voucher. Like if you go to this place to go and eat, it's free. That's all. All you need to do is present the voucher, and they're not going to collect money from him. So it's not like the company actually gave him any money. I don't know if you guys get sha. Okay. So we ignore that one too. Is a noise making factor. Number V, he was assigned an official vehicle for his exclusive use, which was purchased at the cost of 8 million by the company. Okay. So what do we do to this? This is what benefit in kind, right? That means we have probably we have all our emoluments already. Let's talk about benefits in kind. So we have official vehicle, right? Official car. What do we do to official car? It's going to be equal to what? 5% of cost. So 5% of cost, right? That's a given. Then the next thing, he enjoyed service of night guard and domestic staff fully paid for by the company. They gave us that the domestic staff was paid 360,000 per annum, right? And the night guard received 480,000 per annum. So, and they now said that the night guard was hired from a company offering security services. Now, before we answer this question, whether we are adding this night guard, first let me write the domestic servants. Domestic okay, domestic servant is staff of the company. Oh, I didn't see that. Sorry. These people, they are not serious. But then they are testing your knowledge of this PIT. And I don't like the fact that you guys are silent. You're making me feel like I'm not teaching you well. Staff of the company is domestic servants. Night guard was hired from a company offering security services. Which of these two would be included in benefit in kind? Before I go back to where the notice, please, can people just like give their opinion? Is it the domestic servant that we had, or is it the night guard, and why? Oh yeah. Oh.
Sorry, what's the question again, man?
I said that is it the domestic servant that will have to benefit in kind, or the night guard, and why? The domestic servant is a staff of the company. The night guard was hired using a security company. Night guard, why?
Because they actually had a night guard. That's he's not a permanent employee. It's just like more or less like a contract.
Did you go and check it? And you don't lie you.
No, I've never checked it.
All right, it's absolutely correct. I wish I have money to give you, but I'm a broke fellow. I don't have money. I would have dashed you money tonight like that. But he's very right. So the rule says that it's only the is it, let's say for example, domestic servant or night guard, if they are a staff of the company, then it is not a benefit in kind. It is only considered as a benefit in kind to the taxpayer if that person is a contract staff, that is contract of employment and not for employment. Abi, is it for abi of it? Before I say nonsense, let's go and check abeg. Sha a contract staff, that is the person must not be staff of the firm for you to consider it as benefit in kind. So let's first write it out first. So the only person we are considering here is the what? Night guard. This is the past question, guys. You guys need to, you know, understand the rules for you to need to do this kind of question. We went there. Let's go under benefit in kind. It should be under benefit in kind. So contract of, okay, so it has to be a contract for employment, that is somebody that had been contracted and not a employer. The domestic servant that is the employer is not specifically for that man, it's for the company. So let's go to benefit in kind. It should be under benefit in kind. So domestic staff paid by employer, where the employer engages domestic staff, e.g. driver, steward, washman, houseman, blah blah blah, for the exclusive benefit, the word exclusive, of an employee, the cost incurred in form of salary by the employer for the use of the domestic staff by the employee shall be deemed as income in the hands of the employee and taxed accordingly. Note, income of a domestic staff shall only be deemed as income in the hands of the employee only where the domestic staff is not a permanent employee of the employer, that is a contract staff. Please, do we get it? As long as the person is not working under your employer before the employer now says, okay, come and help this man to do his work, then it's an income to the man. But as long as the person is working under his employer, it's not an income to the man. No. That's why we only consider night guard and we did not consider what the domestic servant. All right, so let's continue. He was transferred to Port Harcourt on November 1st and was paid the sum of 2 million for the purpose of relocating. Is this a benefit in kind? Is this an income? Yes, no. Why? Oh yeah, oh,
Is it for the apartment?
not the apartment though. It was transferred. Yeah, this number 7. It was transferred to Port Harcourt and they paid him 2 million for purpose of relocation. We have even spoken about this one tonight too. We have spoken about it tonight. That is Sheila Ale.
Oh, I think he said it is a reimbursement.
Mm, this
It is not
purpose
better
of
than this one.
relocation too. We've talked about it tonight. Adeolu ò ti lọ wá jáde. We've talked about this thing now. I already told you that. I'm not sure where we got it from, but I know we spoke about this night, not last or one time. We said 3 things are exempted from employees tax, like you're not going to tax them. We talked about meal, when they give them lunch or non-assignable voucher, or if they eat in the canteen, no tax on it, right? We talked about purpose of relocation, exactly, it's exempted from tax now. If they give you money to relocate, they're the one that transfer you and they not give you money to relocate, it's exempted too. Then the third one is which one? When they give you money for uniform, or I think they mentioned like 4 things there. So those things are exempted. This one too is exempted because they're the one that transferred him now. So definitely you spend money for like you spend money to relocate, to carry his load, to carry bed, to carry chair. It's not small money now. You move from Lagos to Port Harcourt. It's not small money, and they decide to pay that money for him. So it's not an income because he's spending it. I don't know if you get it, Sha. So it is not an income, please. Then the next one, they said he live in a rented apartment, fully paid for by the company, 600,000 per annum. Now they did not give us any other information on this rented apartment. Normally we would use the rateable value provided by the tax authority. But since they did not talk about the rateable value, they did not give us anything. We use the what entire figure. Rent is how much? 600,000. So I think that's all. So then we have the what? Gross emoluments, which will be equals to addition of the end and unearned income. Okay, the video about end income, everything is end income. So then what do we have again? Tax exempt. The first tax exempt we have here is what? Pension. Sorry. Pension. And they say pension is 8% of his salary. This pension, please let's go back to where we have pension, because some things that you had together before you do 8%. I'm not sure that's basic salary or we're adding bonuses. Okay, you're not supposed to be foul. Okay, here we are. Pension scheme. Basic salary. Hey, I know there are some things you add together. 8% of basic salary, housing and transport. It does not have housing, it does not have transport. So we just do 8% of his basic salary straight of this one. That means if you miss this answer, you will not get the pension correctly. So that's his pension. Then apart from pension, they say you have life insurance policy and paying premium. Okay, life insurance. How much is the premium? 20 is the premium that we are after. Say 20,000 per month. So we are going to be multiplying again. Please, you have to be careful. See how they're giving you months. If you are not careful, you'll be writing 1 month instead of for the whole year. The word is per month. You need to read this thing one by one and see the things that they set as trap for you. All this month is trap. Most people will ignore and not even see it. We have he subscribed to national health insurance. and the National Housing Fund Scheme, and he paid what this amount on a monthly basis. Baba, monthly basis. So we have NHIS equals to how much? He paid 35,000 every month, multiplied by 12 months, and he has what? NHF, the National Housing, NHF. So he also paid what? 40,000 naira per month. Total exempt now. Our Kenya finish here. Okay, why is it not? Okay, this is the total exempt. When we remove exempt tax, what do we have? We have gross income. Please, this format should stick in your head, Joe. I'm solving questions, even though we don't have time. I'm intentionally solving questions because I can see this question in the PQ. It's there. And it's a bonus question. It's not hard. It's not hard. So when you see it, you're supposed to grab your copy. So you're not supposed to reach that page. You're supposed to read. Yeah. You're very hard this up. So this is our gross income. Then we consider what? Consolidated relief allowance, which is what? I don't think I need to write it out again. I've written it out in the first one.
What about the additional information 9? That's 20,000 per month, premium of 20,000 per month.
Yeah, we multiply it by 240. Multiply it by 12.
Okay, ma.
Yeah, we already did that. So we have the CRA equals to the higher of 200,000 plus 20% of this figure, or 1% of this figure. I think 1% of this figure plus 20% of this figure. That means it's 200,000 that is higher. The answer did not change. So of course we're putting minus because it's a negative, we are removing it. Then what do we have as our taxable income? See our taxable income here. So that's answer to number chargeable income. Sorry. Let me write chargeable income so people will not be confused. So it's the same thing, sha. But shall let me write what is in the question. So then we have income tax payable. That's the last question. Income tax payable. So of course, let me go and copy this tax payable. Now to know our balance equals to this figure minus 3,200,000. So then at what? 24% equals to 24% of what? Of this figure. Then our total tax will be 814,561. Any question, guys? I put a lot of questions in that material. Please go and practice. Hey Joe, see how I'm begging you now. Go and practice. If you have question, come to my DM on WhatsApp. I will respond to you. It might take time because like I said, I have a 9 to 5 job, and you might call me when I'm busy. So I will definitely respond to you and tell you to remind me. Don't do Oloju. Remind me, eh? I will check it. Eh? Please. Okay, so I guess that's where we're going to be stopping for self-assessment. Now let's move to settlement, trust, and estate. It's still PIT. It's still PIT. But PIT covers partnership too. Settlement covers payee, like those that work 9 to 5 like myself, covers those that have business, depends on the question that you get. So now, is there any question before we move to the other aspects? Is there any question? So this one, we cannot do workings tonight, but we explain that this till 10 o'clock. I promise you guys that I'll reach 10 o'clock. So I will definitely keep my promise. But before we move now, is there any question? Tomorrow we must finish this work, or at least we do calculation and we round up. No question. Okay. So let us continue now. We are going to be talking about personal income tax on settlement, trust, and what estates. So let's divide this thing one by one. Settlement is a means by which enjoyment of an estate or part of it is transferred to another person, either through disposition, covenant agreements, transition of assets by reference to a trust for the benefit of persons specified. So that's when you pass your estate. We are going to talk about what estate means or part of it. You let people enjoy property that you have. That's just the succinct definition. For example, now I have, let's say, a building that has 4 flats and I get my rent and I decide to say, okay, the rent that I'm getting from this 4 flat, let's so get this particular amount of money out of the rent every year. No, that's settlement. But it has to be through something. I might do it through a trust, through an agreement, by telling them that out of the 4 flat, one of it is there. So whatever rent that comes with that 1 flat is going to them. That means there's a means. You have to transfer that particular enjoyment through a particular means, right? So that's settlement. Trust now. It refers to an equitable obligation binding a person called the trustee to deal with a property over which he has custody for the benefit of persons which he or she may be one. So now let's make this definition relatable. When you say we have a trust, right? A trust is like, you it's just like the word trust. It's not something you can see. It's just like a written document, an agreement, or a contract, whereby one person called a trustee. Now, the trustee is the person that is in charge. It's like when you're telling you that this is my will, and I'm putting you in charge to ensure that the things in this will are done accordingly. Do you get? So the person now, though that the example that I cite, it has a name. It's not a trustee. It's not the name. I'm just let me set another example so we'll not get confused. Let's say, like I said now, hey, I have 4 flats and I want, let's say, my child, my baby, I want him to at least enjoy, benefit from my 4 flats. Let's say I want him to go to a very expensive school. And I say, okay, uh, because this school is very expensive, let me help my husband do out of the school fee, I'll be paying 20% or 30%. And then I put it in the document that so let's say my younger sister should be the trustee of the trust. And what is the trust? The trust is that rent from my 4 flats will be used to pay what 20% of my child's school fees every term. You get? So now the person that is in charge of ensuring that money from that 4 flats is used to pay my child's school fees is the trustee. And the person that is enjoying that benefit, that is the person that I'm paying the school fees for, is the beneficiary, which is my child. And one thing about trust is that sometimes the beneficiary can be the trustee because your beneficiary can be more than one. If I have 4 children and I'm paying for the 4 of them, and let's say, for example, the firstborn is in university, other ones, let's say secondary school, primary school, the one that is in university that is already, is an adult and can probably take care of something like this, I can make that one the trustee and ensure that you and your sibling get your school fee 20% every year from so and so. And that person will not be the one going around and say, it's time for that body school fees. Oh yeah, come and pay. It's time for that the school fees. And even though he or she is also a beneficiary, do you get? So now estate is the total of property of a person and is commonly used in executorship. It also means property of a deceased person. So your estate is what you own, like your total property, whether you own 5 houses plus shops and whatever property that you hold, everything together is called an estate. And also, it's also used to refer to the property of a deceased person, someone that have died, and you leave property. The property will be called an estate. So now, child is include a stepchild, adopted child, and an illegitimate child. So when they say get the word child, it's not only legitimate child, or it could be any of these words of these three. Settlor is a person by whom the settlement was made or entered into directly or indirectly, and in particular include a person that have provided or undertaken to provide fund directly or indirectly for the purpose of the settlement. So before this Oyinbo kill us, the settlor is just the owner of the what of the trust. In the example that I've been citing, I am the settlor. I mean, because I'm the owner of the what trust, I'm the one that decided to transfer the enjoyment of my what rental income to my children. So I'm the settlor. Now, will a document made by a person as to how his assets shall be distributed as his debt. Please, all these things that I'm explaining to you is in the past version. If you like, on your laptop and go and be eating eba, abi you should go and be watching ball, abi playing PS3 or PS4. It's in the past question, so better listen now, so that you don't have to cram this thing. If you understand it, it's going to be easy to put English together and write something down. Even if you don't understand, if you don't remember the definition of verbatim, you will not be blank because you understand what these words means. So, guys, are you with me? Don't go and be eating eba by the side. Oh, listen. Oh. Thank you, Michael. Okay. So we said a will is a document made by a person as to how his assets should be distributed at his death. So now everybody knows what a will now. At least, except if you don't used to watch Nollywood movie, you don't know what will is. Everybody knows will. I don't think I need to explain deep on that one. Now, the person mentioned in the will to administer the estate. Don't forget what estate is. What is an estate? Property of a person. If you are dead, in this instance now, the person is dead actually because of course it's a will. It's not a will if the person is not dead. So now in the will can mention somebody and say this is the person that should administer my estate to. That is the person that will see to the carrying out of the will. That person is now called the executor. It is the executor that will help you and say, okay, he left 2 houses for his first child, he left the shops for the second child, he left all the money in his account for his. Is that the executor that will ensure that the houses left for the first child actually get the first child? All the documents that will transfer ownership from the deceased person to the first child is done, and without any issue. Executor will ensure that the last one that got the money in the bank account actually gets the money. The bank transfers the money and he receives what the money is. That is the work of an executor. But in some cases, the person that died might not assign an executor. So when there is no executor, the court on application will appoint an administrator. So this administrator is actually the same thing as executor. The difference is that one is assigned by the person that died. Kotoku, he has said that it is Lagbaja that will share my words, that will ensure that my will is followed through. But for administrator, it is the court that will assign the person. It could be a lawyer or maybe somebody known by the deceased person. Sorry. So that is for will. Annuitant. Annuitant is a person receiving an annuity, that is annual payment from an estate. So if you receive annual payment, you are an annuitant. Beneficiary, somebody that receive income from settlement, trust, or estate. So if you receive income from any of these three, you are a beneficiary. Legatee, someone that receive gift of personal property by will. So in the will, the dead person has assigned you a house or company or so now we have two types of legatee. We have specific legatee and residual legatee. For specific legatee, the person will be named in the will to receive a particular thing. For example, okay, give my house that is in Lekki to Solomon. Solomon is a specific what legatee because He specifically mentioned Solomon's name and, and also did what? Also mentioned what Solomon is supposed to collect. You get. But for a residual legatee, the person received residue, just like the name connotes. Residue, that is the remainder after all the property has been assigned to other persons. So now let me cite an example. Somebody died, the person has shops, have houses, have businesses. So and I say that, okay, oh, my firstborn should take charge of my business, maybe because that one is very good at it, right? The second born should take, okay, out of 5 shop, take 2 shop. The last born, out of 5 houses, you take 3 houses. The remaining, which is the shop and the houses, goes to what? The, let's say, illegitimate child or the mother. So the mother will become what? A residual legatee. Somebody that receives the residue of what is left after specific people that have been mentioned receive their own. That is residual legatee. Now, devisee is a person that received a real property under a will. When we talk about real property that you can touch, see like this. Example, house, shop, goods, cash, right? So that's the devisee. Personal representative, a person, whether an administrator or an executor, that is charged with the administration of the estate of a deceased person, and in whom the estate is vested for the purpose of distribution. Sorry. Eh? Wait. Sorry, I'm really sorry. My child
Um,
was.
yeah, sorry. Hello, I'm sorry. I want to know what is the reason between the difference between legatee and the devicee?
Legatee and devisee. Legatee receive a gift of personal property from the person. So personal property, it could be anything, maybe whether tangible or intangible. So personal property should be tangible, sha. But a device is real property, is not negotiable. It has to be something that is tangible. Did you get that?
Okay, ma.
Alright. So for personal representative, it could be an executor. It is an executor if the person is mentioned in the will, and it is an administrator if it is a court that assigned the person to carry out what the instructions in the will. So that's just the personal representative. Life tenant. Life tenant is a person that has a right to the income or property held in trust for life. You um there are some property that you hold in trust that forever is going to keep providing money. The money will not diminish, it's not going to finish. For example, if what is in trust, the estate that is in trust is a business that is still ongoing, and let's say limited liability company, and it will keep making profit, and the person has decided that the beneficiary for that trust will be his children. Till those children die, they will keep collecting money from the company as long as the company is in existence, and they become what? Life tenants. They become life tenants to the what? Property held in trust. Remainder man now. A person who has right to the capital of settlement when the life interest terminates. So I would say the remainder man will probably be the settlor, the owner of the settlement, because when you have, let's say, giving out whatever you want to give out, the capital, that is the initial, should I say property or the money, the person that has the rights to it. Oh, it might not even be the settlor actually, because what if the settlor is dead? What if it's not someone that is? So now the owner of the capital will probably be somebody assigned in the will to have the capital or if the owner of the settlement is still alive, then that will be the settlor itself. So after you have distributed all the money, you have given them rental income for property. Who has right to the property is still the settlor. You get. So even though the rental income is going to other people, to the beneficiary, it is somebody that has right and say that I own this property, and the owner is what the remainder man. I hope we are still rolling. Administration period between the date of death and the date in which the executor is able to set up the trust or distribute the residue of the estate. That's called the what administration period. This one is quite like explanatory. So persons liable to tax from settlement, trust, and estates. Number one, beneficiary, including any annuitant. So as long as you are a beneficiary, the portion of income from the settlement or estate that you receive is going to be liable to what? To tax. As long as you received that income from that particular estate or settlement, they are going to tax that particular income. Number two, the trustee or the executor. Remember, executor is in charge of will, trustee is in charge of a what? A trust. The remainder, if any, after deducting all amounts apportioned to beneficiary is liable to tax. So yeah, in this case, we are saying that it's not everything that the trust has that was distributed. Like I said, it could be an ongoing business. A trust could cover an ongoing business. So now after giving these people the money from the profit remains, we tax that profit, right? For an executor, after you have distributed the will, the man still has something, maybe an ongoing business that will fund a what, let's say a foundation. Foundation, some people are dead, but their foundation is still running, because it's tied to a particular business. So the stuffs that are left after you have given your beneficiary everything that you're supposed to give them is going to be taxed. It's going to be taxed accordingly. Then the last person is the settlor, or the person who created the trust, in circumstances where he can direct the disposition of the income or the right. Like I said, remainder man can be the settlor or another person. Do you get? So you are going to tax the owner of the what of the trust too, the settlor. As long as you shall have the rights to those income, they are going to be taxed. Now, the relevant tax authority. Who is supposed to take the tax of these people, of these three people that we've listed? Who has what? The right to collect the tax? Number one, where all the income of the trust or settlement for the year of assessment arise in one territory, the tax authority of the state. So we are saying that the income of the trust or the settlement is arising from just one place. For example, your state, all the income is from Oyo State or is from Ogun State. In Oyo State, it is going to go to the OIRS, that's Oyo Internal Revenue. But assuming it arises in Ogun State, it's going to what Ogun State Internal Revenue. But in the case where it arises from more than one territory, that is, some arise from Lagos, some from Port Harcourt, some from Abuja, then you are paying towards the FIRS, which is now the NRS, right? So those are the two tax authority. So for the basis period for assessing um the income of any trustee, executor, beneficiary, and annuitant for any year of assessment is what the preceding year basis, which means that it is the income for last year that will be charged what this year. A trust of a settlement or a trust in Nigeria, the executor of an estate in Nigeria shall prepare account of income from all sources, that is the executor of a trust of the will or an estate, or the trustee of a trust. They will prepare an account, and the account will show all of the income that have come in from all sources of the trust or estate for successive period till 31st of December, that is from January to December. Compile all the income from all sources, and to the dates on which the assets of the settlement are finally distributed. Sometimes it might not reach December. In case of that, you have to reach the date in which you actually distributed all the assets. Note that the commencement and cessation provision do not apply under settlement, trust, and estate arrangements. So we should note that. allowable expenses. So allowable expenses peculiar to an estate includes number one, expenses of a trustee or executor connected with the settlement, trust or estate which are authorized by the trust deed or will. So if the trustee or the executor spend money in ensuring that his duties are done, then the money should be what? Allowable. It's an allowable expense because if not for the work that you give the man, would he have spent the money? No. So as long as he's spending the money for the trust or what the estate, then it's an allowable expenses. Number two, any fixed annuity paid out of income under the deed or will. So fixed annuity is also what an allowable expenses. These two are allowable expenses. Now, don't know if we should stop here or I think we can still move on. Let's read one or two. Computation of income from settlement, trust, and estate. Now, the computed income is simply what the difference between total income and allowable expenses. Now, see the word computed income. I'm supposed to bold in that part. Computed income. Let me give it right. What do you call there? Computed income is what the difference between total income and allowable expenses. Where the income of the trust include gain, profits from a trade, business, profession or vocation, or a rent or premium. Such addition and expenses shall be taken into account in arriving at the computed income. So we are telling you that like I already said before, a trust does not only cover property, an estate does not only cover, it can cover a business, an ongoing business that even though the person that owns the business is dead, the business will still live on. So what if that the will or the trust or the estate include that business and gain or profit from the business is still flowing in, right? So you would also include that gain or profit from the business to get your what computed income. Okay, so guys, I think we are going to be stopping here. We're going to be stopping here. We'll start from capital allowance tomorrow. I think we should be able to finish this tomorrow. We'll take like 2, 3 questions. I think I put like 4 questions there. Take 2, 3 questions. So I'll be uploading this to the drive for those that want to read through. Maybe you read what we've done, or you want to like pass what we've done before. What is different between actual year basis and preceding year basis? How is it prepared? Ah, is this person cannot be somebody that has been coming to my class and you're asking this question. David is laughing. He's shocking me, Nina, because these are things that you must know. They are basis of taxation and you must understand. So let me just answer your question. Actual year basis, it means that you are taxing profit of this year in this year. Profit of 2025 is taxed 2025. But for preceding year basis, profit of 2025 is taxed in 2026. Do you get? Profit of 2026 is taxed in 2027. Depends. It all depends. So how is it prepared? It's not about preparation. You don't prepare basis. It's the accounts that you prepare. So it depends. Like we have justified the fact that settlement, trust, and estate is prepared in preceding year basis, right? So we follow preceding year basis. But for other things that follow actual year basis, like when we talked about self-assessment, if you guys remember that PIT that we just finished, PIT for payee follow actual year because as the person is collecting salary, they are removing the tax and paying to the government immediately. But for self-assessment, when you talk about somebody that has self-employed people here, self-employed people is preceding year basis, you need to make the profit before they can tax the profit. Abi, shey they will tax profit that have not made o. So it means that the profit of 2025, the January to December of 2025 will finish like this. And we can say that this is the profit that I made before they can now tax it in the following year. I hope you understand now, precious. Okay. Any other question before we call it a night? I'm definitely tired and I need to eat. All right. You're welcome. Okay. So I guess this is where we call it today. I'll upload the material again. I don't know you guys. I don't know why you don't read. I don't know. If I ask question now, you don't answer. Please read it. I'm begging you. Read it, eh? Adeolu, keep up with the video. I can tell you are reading. Read more. All right. Everybody, David, you keep laughing. You are laughing at me since, no problem. Sha keep laughing and really jaja laughing. All right. So take care, everybody. Good night.
Thank you, ma.
You're welcome.